Voyager Digital issues Three Arrows Capital with default notice. The crypto broker is reported to have lent 3AC approximately $350 million in stablecoin USDC and approximately 15,250 Bitcoin, which equals approximately 673 million as of today's prices. And the reason why I say approximately is because we got that volatility there. Also, too, it's looking like Three Arrows Capital is insolvent because they haven't responded to this request. And apparently Voyager can pursue legal action. However, I don't know if they can actually pursue legal action if there's nothing to take back from a company that is insolvent. Lastly, it is very, very important to note that on June 22nd, Voyager released a press release announcing a 200 million and 15,000 Bitcoin load from Alameda Ventures. And it is also important to note that Mr. Big Daddy Chad Sam had a personally purchased approximately, I think, is that 15 million shares? I don't know. It's a lot of shares in Voyager, but I need to get your guys' opinion on this because this is getting a little bit spicy, and I have a closing thought on this story also.
Jump in. I mean, the number $137 million of cash and crypto assets on hand at Voyager seems highly troubling. That does not seem like a lot of money given what's going on in terms of the loans that they made out to 3AC. So again, stepping back, this is that Three Arrows contagion that we're seeing slowly creep across every crypto lender and hurt them all badly, right? The idea here is that 3AC was down bad. They started borrowing assets, doing some risky stuff, and those risky bets that they were hoping would get them back in the black just got them further in the red, and they're taking down these crypto lenders with them. So the fact that Voyager doesn't seem to have that much in terms of cash and crypto on hand seems a bit scary, given that they are pulling money out of the loan that was extended to them through Alameda Ventures, which is obviously Sam Bankman-Fried linked. The fact that they're doing that now suggests that they don't expect to get that money from Three Arrows back, and hopefully they'll have enough to continue their operations as normally planned. But yeah, that number seems like cutting it kind of close. So we'll see what happens there. We saw last week they reduced their withdrawal limits, so there's definitely some ramifications for Voyager users who may be caught holding the bag on this one. But I'll toss it back to Wendy for her thoughts.
One of the last things I kind of want to say about this is I don't think the Bitcoin bottom is in. We're seeing a lot of people say Bitcoin bottom's in, start buying the dip, blah, 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 blah. And I think until this contagion is kind of settled and we actually, like once everything is done with Three Arrows Capital, with Celsius, then we can actually start to see a Bitcoin bottom. So that's why I'm contemplating for the actual bottom, for actual capitulation to be anywhere between 10,000 and 20,000. And back in the 2018 bear market, we saw that at approximately like 3,000 to like $9,000 we went sideways. So that's what I'm anticipating. I don't think the bottom is anywhere near yet until all of this contagion gets contained.
I would like to say that we are not giving financial advice. I will always put that little asterisk on whatever we say on this show. So I think when Voyager said, I think last week, that they were putting a deadline of June 27th on 3AC, I don't think any of us thought that 3AC was going to be able to pay back their debt. The article gives a nice background on 3AC being this darling of the crypto bull market. And I think it really is a lesson. You know, like in the bull market, everything is amazing. We're on yachts, we're spending money, everyone is rich, enjoying life, taking risky bets. And then we hit the bear market and it's very, very obvious who hasn't been preparing, who hasn't been diversifying their risk. And to what Hester Peirce was saying in, I think, one of the articles we spoke about last week, maybe it's time to just let these companies who weren't able to prepare, who have shown that they actually haven't been able to diversify their risk and manage a company to live through these things that we know are going to happen in the financial industry and especially in the crypto industry and crypto markets. Maybe it's time to just let them pass away. But Zach, I'll hand it back off to you.
Yeah, so Three Arrows is Suzu and Kyle Davies. And, you know, I think the point about Suzu specifically kind of counter trading his Twitter following needs to be taken into account here. But he was the loudest voice of this being the super cycle, right? This time being different because of the way institutions had embraced Bitcoin and digital assets in this latest run, right? So he was betting, at least at some point, on this super cycle thesis. And that thesis, he later admitted, was flawed. And that flawed thesis and these additional risky bets that they took on through these loans across the entire centralized finance lending apparatus, that is what we're seeing now play out in pretty stunning display. Now we have people trying to poach Celsius assets, people putting together offers for BlockFi bits and pieces, and all of a sudden the crypto lending industry is extremely shaky. So it is interesting to see this all unfold, and it's a wild one. Wendy, last thoughts.
Well, gotta say one more thing. I do think we did have a super cycle. We literally had two pumps. We hit an all-time high, like a swing wick high of like 60,000, 65,000, and then we dropped, corrected. And then we hit another swing wick high at approximately 69,000, and then we dropped. So this cycle was a lot different, in my opinion, than what we saw in 2017, 2018. Even though we didn't get those crazy numbers like the 100,000 Bitcoin, the $250,000 Bitcoin, we still had a lot of really great opportunities in the bull market to make money. However, there was quite a few more bad actors that we have seen. And don't you guys, one thing I do have to add, create your own trading and investing plans, and you'll do a lot better than following somebody on the interwebs. Don't follow me either, not financial advice.
You know, the old adage, only invest what you can afford to lose. I think that plays here. And some people were investing far more than they could afford to lose.